Good morning, this is Connor from 500 Edge, where we trade SPX 0DTE options and ES futures. If you want to join the team, link in the description. In this video, I'm going to recap the previous session and break down what matters ahead of the opening bell. On Tuesday, we took a total of 2 trades, both losers. A long butterfly, 73.30, negative 43% ROI, and 73.35 long puts, 100% ROI. That puts us down 1.43% on the day for a total portfolio return of 15.48% since inception 7 days ago. So pullbacks like this to be expected. Drawdowns, red days, part of the game. But let's go over to the chart here and I'll break down both of those trades. On the 15-minute time frame, the SPX trend was down with the 20 EMA below the 40 EMA and down sloping, trading below our main transitional level of 73.95. Market internals bearish for the most part, ADD negative 1200, which persisted for the full session. Relative sector performance, however, growth underperformance in the morning, and then we had the turnaround at 12:30. So growth did lead that bounce, and we had a moment of outperformance in the late afternoon. U.S. 10-year continued to rise. Right now, 4.64%. WTI, that's U.S. oil, back above $100 a barrel. Two things that are headwinds for equities at this juncture. With all that said, we were bearish going into the open, looking for a move into the 73.38 previous week's low, the SPX put wall at 73.30, with the one-day implied low also in this range, so confluence. Took a short off 73.75. That move did materialize. However, my choice of strategy, the long butterfly, did not turn a profit. And of course, we did not pin that 73.30 short strike. I was able to reduce the loss on the MOC sell-off. And I was telling our members in Discord, oftentimes when you have butterflies in the last 10 to 20 minutes, the furthest long leg is going to be worthless. And if you're trying to execute the full position, you're going to have zeros on your bid and ask quotes. But if you remove that worthless long leg, so don't execute that position, you'll oftentimes be able to get out for sometimes a winner, sometimes a small loss, because the closest long leg, which in this case was 40, still had some value. So that worked out well, kind of piecing out of that trade. Still a loss, but was able to reduce that loss. My second trade, which was a bad trade, not just because it lost, right? Because not all losing trades are bad trades. Sometimes you have good trades, good setups, you take it, and it ends up being a loss. But I did classify this as a continuation trade, which I don't think is entirely accurate here. So I re-shorted this 70-75 zone, looking for reversion back to lows. But if we look at the moving averages here, we did have the 20 EMA starting to slope up. We reclaimed the 8 EMA in orange, and we held above that 8 EMA all the way up into 73.95. So that's an indication that there was very strong bullish momentum. Not to mention, this came after a breakout of, basically 2 hours of consolidation. Now, if I was a little bit more patient, I had an A+ setup here right off the flip, reversal trade, potentially back down to lows. Now, I did not take this trade as I already had too much downside exposure, but that worked out. So overall, not a great day. It was a losing day. However, given how we size positions, no more than 1% per trade, 1.43% is not bad, given that we just had a 7% gain the day prior. For today, on the SPX 1-hour time frame, the trend has turned bearish with the 20 EMA crossing below the 40 EMA and downsloping. This follows the 15-minute time frame where that trend changed from bullish to bearish last Friday, and we have been in a downtrend over the past 3 trading sessions, printing a series of lower highs. In terms of levels, a bit of a shift up day over day. Most notably in our SPX flip was shifted lower from 73.95 to 73.70. This is the bull-bear transition, so if bulls can reclaim it, they will reestablish control, potential for momentum on the upside for a move into 7,400. 73.95 also significant here, just in the fact that it was the cash market high. So a break above that could be a potential trend change. So bulls are going to be trying to put in a higher high. Additionally, we have a small gap here that remains unfilled. Entry is 73.95, fill 74.03. In the event we do break through that zone, SPY call wall overhead at 74.16. That is SPY 740. 74.25 resistance, and then we have big resistance up here at 74.50, which is G1. Below the flip, we would look for a move back down to lows, 73.38 previous week's low. Gamma support, 73.45, 73.40, and then we have the SPY flip at 73.36, which is SPY 732. Now, in the event we do break this, it does open the door for continuation on the downside, so that is breaking the previous session's low, with potential support at 73.16. That is the SPY put wall of 730. We have the SPX 0 gamma level at 73.05, and then the big 7300 handle. So bulls are going to try to put in a higher high, break that high, which could confirm the trend change. Bears are going to try to put in another lower high, so below 95, to keep that downtrend intact. But as of right now, we have a big confluence zone on the downside, confluence zone on the upside, and that transitional level right in the middle. VIX option expiration is today at 9:30 a.m. So moving forward, there is more potential for volatility to start trending. Two key levels to focus on, 18.3, 17.7. These two levels have boxed in volatility over the past two trading sessions. In the event we do break out, it opens the door to 19, 19.3, where vol sellers have also been active, followed by the 20 strike. In the event we break down, it opens the door to 17.2 and 16.7. Transitioning over to our dashboard, total gamma exposure is positive, 395 million notional, trading in close proximity to our 73.70 flip. Above, all strikes are positive, that is supportive for the market price. Below, all strikes are negative, that is destabilizing for the market price. If bulls can reclaim that transition, it opens the door to 7,400. Above 7,400, market flows will become much more supportive as dealers buy dips, sell rips, so lower volatility, with major resistance at 7,450. There's a kind of a gamma cluster within this zone. It could end up being more sticky than rejection, but two notable levels, 74.25 and the SPY flip at 740. This is SPX 7416 equivalent. If bulls fail to reclaim that transition, we have 73.45, 40 gamma support, which basically correlates more or less with the low from yesterday's session and that previous week's low. So that's that confluence zone we were talking about on the downside, followed by 73.15 and then 7300. In terms of the implied move today, 0.8%. We have an implied high of 74.12 and an implied low of 72.94. In regards to catalysts, VIX OPEX 9:30, so keep an eye on VIX today, and then 2 o'clock we have the FOMC minutes, which is basically a hit or miss in terms of sparking volatility, usually a miss, but keep your news feed up, remain vigilant. If you want real-time SPX 0DTE trade alerts, plus the full framework to trade the market with Edge, join the team at 500edge.com.